The following is a presentation of Tfnn. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the DAX like we always do. Remember today, folks, we have a solar eclipse and a new moon today on February 27th, so we'll pay close attention to that, of course. But first, we'll take a look here at the DAX. You can see we completed the ABCD structure here over these past couple weeks. We're now in the midst of a correction. We came down to just a little bit below the 61% retracement of the last swing, and so far we have held that. This is still, of course, in an uptrend, but there is a little resistance above the market, and I repeat, a little resistance above the market. The next request we've had is to take a look at crude oil. We have a very interesting situation in the crude oil market. If we look at this 4-hour chart, you're going to be seeing this diagonal pennant that we've had put in here, diagonal triangle, also called a pennant. And you'll notice how the market broke out to the upside. It went up about $1,000, and then it came back to the exact 61% retracement, touching the downside part of the pennant. That's a very, very important line to look at, as we've talked about before, because not only is it a 61% retracement, it also happens to be that 20-min line that we look at where things return to it. And again, we went up again, made another new high, still not taking out the $55 per barrel level. And then we came down over Friday and Sunday, we came down into this area of the 61% retracement, again, giving us really 3 higher bottoms since we bottomed way back on February the 16th. So this market is still in a short-term uptrend, long trend. Longer term, of course, it's in a very tight channel between $55.20 and $50 per barrel. But the odds are starting to favor a breakout to the upside here because of the way the market reacts when it comes down to near-term support. If it were really bearish, it would bust through that support and go down and test another level, but it's not doing that. It's over a period of days, of course, it's accumulating buyers as it comes into that level. Now, if we do break out to the upside, the price objective of this would be around $59 a barrel. That's easy to figure. You go from $50 a barrel up to $55 a barrel, and then you go from your last ABCD move, and that would take you right up to around $58 a barrel, I believe, is the actual price it would be looking at. That would be $3 higher than the high that we made at the end of last year. So that's what we're keeping an eye on crude oil. So we want to watch it rather closely. A lot of things happening, of course, today with this, big astro event that we have. By the way, Norm Winsky is calling for some very important turning points for today, primarily based on, of course, this solar eclipse and new moon. If you remember, we had a new moon way back on May the 19th of last year, and he was looking at the market for a potential top, and that was the top for 2016. Now, there's a lot of talk this morning because Warren Buffett has been on CNBC all morning talking about the fact that the stock market is not overvalued and he doesn't see any signs of a bubble. Well, I know he's the Oracle of Omaha, but folks, I've been looking at these charts for a very, very long time, over a period of about 6 decades, and I have never seen a market that like this. I went back to 1929, I went back to 1987, I went back into the 50s when we had the what was that called? I forget what the Nifty. It was not the Nifty 50. It was oh shucks, I forget. Yeah, maybe it was the Nifty 50 at that time. But the main thing is that if we look at this, we have gaps, folks, on the weekly Dow chart. I mean, that is so unusual. You just don't find it. There's only one. I checked this again just to double check my records, and believe me, we didn't have the great technical stuff like we had now, back in the 70s. But if you go back and look at this, we have a gap on the weekly. We have two gaps on the weekly Dow chart, folks. Believe that or not. I mean, that's just amazing. The only unfilled gap that I can find in the Dow Jones is the one back in 1975. That's after we had those two massive double bottoms on October of 1974, and again in December 1974. And then in the spring of that year, the market did gap up. It was trading at around right around 400 or 500 in the Dow, as I recall. And then, of course, we had the move that lasted for well, it's still going on for 33 years now, 33 years, and we have gone up more than 400 times, no, 40 times. We've gone up 40 times the amount of the Dow. We were 500, so 40 around 20,000. So that's what we've done over this past time. But to say that there's not any bubble present, it means that I don't think he's ever really looked at a technical chart. And that's really the sum total of all the buyers and sellers. But if you look at this gap on the daily, we've had 1, 2, 3 gaps. Those are equal to weekly gaps because you're looking over a 3-week period. We have 2 weekly gaps on the Dow. We're also 200 points above the 200-day moving average, which is a standard that many of the mutual fund and hedge fund people look at. And as you can see, when we were 2,000 points below that moving average, that was a bottom. I'm not saying this is anything here. I'm just saying the fact this is a record move above that level. If you add to the fact that we have record margin debt, the contrary opinion, in other words, the number of people bullish or bearish, the bullish consensus is near a record high. It still hasn't taken out the high of 2,000, I believe, but that depends on how you measure it. We have record lows in the VIX. We have a record number of gaps in the Dow Jones. We have a record number of new closing highs that is matching 1987, where we had 11 straight higher highs and higher closes in 1987. We have record debt in the United States. We're running at around $18 trillion. We have record debt on new car loans, record debt on student loan debts, record debt on margin, record debt on consumer debt. If those aren't things that are indicative of something very dramatic, I don't know what is. But you can't walk against. I'd hate to be on a program to try to to try to convince him of something because he's so very, very powerful and successful. But this is what I'm seeing, and I looked at all of the Dow stocks. I looked at all of the S&P stocks that are high priced, that the high cap stocks, to see what they're doing, and I looked at the Nasdaq stocks, the top 25 there. Folks, I can't find a pattern that looks like it would be be the case. So we'll see if that is going to happen. Anyway, we'll look at this as we go through some of these things and take a look at it, and we'll go from that level. Okay, someone said CNBC won't invite you on. I've been invited on several times. I used to be a regular on the old CNBC, which was Tfnn. Let's see, it was FNN back in Los Angeles, and then I was a regular for a while during the early 90s with Sue Herrera and Ron Insana and Bill Griffith, but just there was no business there. I mean, it was just a fun thing to be on, to see your picture on the tube, and that's no good. Anyway, let's take a look here at just the markets for a break.
Tfnn is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting tfnn.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting tfnn.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to diverge a little bit and go in to talk about a little bit of memory lane stuff, a little bit of history. But I posted into the Tiger TV one of the charts from my book, Astro Cycles: A Trader's Viewpoint. It's the top in the stock market in 1987. I just wanted you to see here these notations. Remember, when I did this, we didn't have all the fancy stuff that you can do books with, so I had to do a lot of this by hand. But you'll notice here that we had 5 planets were at conjunctions at 0 degrees. We also had a new moon like we have today on the equator. But if you'll notice that all 5 planets were leaving the sign of Leo, that was very unusual. This is this tight formation that we see, at this time. Now, when I first started to do this book with Dr. Miller, I was an old Hurst cycle guy, the profit magic of stock transaction timing, but I still had a little bit of experience with Gann and Ruth, what was her name? Oh, dear. Oh, my gosh, I can't think of her name. Not Ruth Miller, but the other lady. Anyway, I'm trying to think of her name. Let's forget it. Okay, but I thought that there was a lot of stuff to do with astrology because Edward Dewey at the Foundation of Study of Cycles had done some work with it, and he felt that that was the way to go, but there was really not enough data or anything to use. So she had to basically prove to me that some of these things really worked. So basically, we were writing the book during this time, and what we did is we went back to the most important times in the stock market. Basically back at 1932, of course, 1929, back in the 1923 level, when the market first broke out, to the upside, and we tried to find some of these similar patterns like we were seeing here that was coming in here on August the 25th of 1987. Well, in 1974, the stock market was, after the crash of 1974, the stock market was trading at around 500 in the Dow, roughly. I believe that was the figure, and we made a double bottom in October. It came down from 1,020, I believe, in 1972-73, down to about 500 during 1974. That was October. That was the October crash. The market stabilized, had a little bit of a rally, and then it came down and made a double bottom in December of that year. Well, on the 74 October, we had, I believe, 5 or 6 planets at 0 degrees or 180 degrees, either at opposition or conjunction. And then 2 months later, in December, we had the same thing occur with some planets that were also going retrograde. They were all in really, really tight formations, much like what we saw, in the stock market in 1987. And that was what we tried to do, is we tried to find similar situations where these things occurred. Now, we didn't know what they meant, of course, but the fact that they were there, and they were the only times they were there, is when you saw these really tight formations that made it, very, very interesting. So if you take this one step farther, if we go back, to where we were in, let me just give it to me here 1 second here. I want to be able to pull it up so you'll be able to see it. Oh dear, I hope it's here. Here's 1932. This was the bottom of the stock market in 1932. I'm not going to do 2009 because you've seen that too many times. I've beat that horse as long as it can run. So this is where we were in 1932. The actual date was July the 8th, not July the 5th. I was off on that. But you'll see that how most of these planets were all in one section. You see all these other things that are blank in here. That's very, very, very unusual. Almost on any day, there's planets splattered all over the thing in this 360 degrees, but not during that time in 1932. So that's another thing that's interesting. Now, I wanted to bring up one other thing that's interesting to show you, because if you'll just bear with me just 1 second here, we're going to take a look at what's happening now in the sky. We'll take a look at it. This is February the 27th on the new moon here, and you'll notice here how all the planets again are lined up in the upper left-hand coordinate there between Aries and Pisces. And if you'll look at the sign of Pisces, look at the very top of the circle, and right to the left of that, you'll see the planets lined up there. You'll see the moon and the sun and Neptune and Uranus and Venus. And if you look in that quadrant, you'll see the 23 degrees, 21 degrees, 11 degrees, 9 degrees, 2 degrees. And right under that, look what's happened. They're all under the sign of Pisces, just like we were in 1987 and also in 1932. Even in the left quadrant where we have Mars, Uranus, and Venus, you'll see they're all in Aries. So everything is in these two quadrants. Whether that means anything, I don't know, but we've seen this before. So let's keep an eye on that. Anyway, you'll see these other ones that are out there, the Neptune, Saturn, and the moon's north node are very, very slow-moving things. They move anywhere from, well, the north node is 18 years, but those are the things that we're trying to keep an eye on. To make this story a little more interesting, is back in 1987. I was on FNN in Los Angeles about every 3 weeks. I would drive down from Pismo Beach down to Los Angeles, and I would be interviewed by either Ron Insana or Bill Griffith, or mostly then once in a while it would be Sue Herrera. But I was saying to Bill that sometime during 1987, during October, that we're probably going to see a move of 300 down points in the Dow. The biggest up move we'd had in the Dow since 1982 had been 191 points. And so all I did was multiply 191 times 1.618 to figure out what the expansion would be to the downside. And how I figured out what the top day would be, I went back to 1929 and I measured the high on the top day, which was the 3rd of September. And I figured it would happen about anywhere between 55 and 89 Fibonacci days, trading days, from that level. So if you took 55 down from September the 3rd, that took you to the 16th of to the 30th of October, and then of course the crash was on the 29th. So all I did with 1987 was I took August 25th, moved it over 55 days, and that took us to April. Let's try it again. It took us to October the 16th of 1987. On that day, the Dow was down 106 points. That was a lot, folks, because it was trading at around 2,600. That was the Friday before the big crash. That was options expiration. I had those options. I had the October options that expired that I had paid just a few $100s for way back in August, and they were now worth several $1,000s each. And I was very happy to be out that day with such a big profit. It was about 22 handles, and I was feeling pretty good because I had a couple of kids at the university level that needed tuition money, but that neither here nor there. But if I had bought November options instead of the October options, it would have been another 40 times that amount. That's how much more would have been made. The problem was getting filled down there on October the 19th and 20th of 1987, because the markets were just absolutely totally illiquid. So keep that in mind. If you want to do some research, go to just click on 1929 chart, 1987 chart. Do the work yourself. Defy human nature, as Twentyman says. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of Tfnn.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are going to move over here to take a look at the XAU, which is the gold silver index, and I'm going to compare it with the gold chart. As you can see, the yellow line, the gold line, of course, is the gold, and gold has been going up for about 10 days, and the XAU has been coming down for the same amount. Now, that is a very, very unusual situation, folks. You don't see that very often. So I don't know what this means. I do know that we've reached a 61% retracement on the gold from the November high. both gold and silver have completed perfect ABCD patterns at the levels that we saw on Friday, 1840 and change. In the July silver, I think it was 1848. And in the gold, the number was at 1259, with the high being 1261. That doesn't mean that it can't break out to the upside, and frankly, it would not surprise me at all, because it's not backing off very much from that level, and we're going to find out today if it is going to do it. But if we can close above that 1260 level in the gold, it could really be off to the races. There's some really big things happening. Now, the $64 question here is whether we are still in a commodity bear market or not. That's, we hear this from some of these hedge fund people that are heavily involved in commodities, and they look at some really long-term stuff, and that's certainly the thing to do. Let's just take a quick look here at the soybean meal market over the past year. And this market has what they call tremendous bearish fundamentals. There's just a great deal of bearish fundamentals. I don't understand them. I just know they're being reported. Commitment of traders and other things that they're looking at, the open interest and things like that. But with the soybean meal, you'll notice that we completed a long-term ABCD pattern here back in January up at the 355 level. We're now trading about $17 a ton under that. That was a perfect ABCD pattern in a bear market. That's one of the things that Gartley felt was the most important thing to look at. We're seeing the same thing in wheat, the same thing in corn, the same thing in the soybeans market. All of them are completing ABCD patterns, or have, as of the lunar eclipse back on the 13th. So we have the solar eclipse and new moon today. So if they don't bounce much off of here, this is going to lead to possibilities of looking at some lower prices in some of these commodities. And also, we've had a big spike up in copper up to this 280 a pound level, and that formed a little 3 drive at that point. So a lot of these are in real critical levels as we come into this time cycle that we're looking at right now. So well, Mr. Z, I will say that all I know is I work with a couple of hedge fund guys that are extremely bearish, and I can't argue with them. All I do is tell them what the charts look like, and I tell you the charts do not look that bearish to me. In fact, they really don't. But they're saying that the fundamentals are very bearish, and I say, well, if the fundamentals are that bearish, why aren't beans 50 cents to $1 lower? And of course, they can't give me that answer. So I don't understand the fundamentals. I used to look at that stuff years ago. It became just a quagmire of numbers that I couldn't understand, but I could understand buying and selling. And if prices are going up, there's more buyers. If prices are going down, there's more sellers. Frankly, I'm looking for a low today in both beans, meal, and oil. I'm looking to buy with a very, very close stop. So we'll see see what's going to see how that's going to work out. But the fundamentals are really difficult. That's the main thing that they have to realize, because it's the total, and the fundamentals will follow the trend. But believe me, you have to follow what prices are doing, because if the fundamentals are really, really bullish and prices can't go up, that market is going down. And the same thing is, the fundamentals are bearish and prices go down, that market's going to go up. We've seen this over and over again. Just past January, when Rich Anderson was on, we were looking at hogs at the cost of production, and they rallied over 20 cents a pound, since that time, after we had a 3 drive to a bottom in both hogs and cattle. And both of them rallied a great deal. So I don't do the fundamentals. I don't understand them. And with all the information coming out now, for every time you see somebody that's bullish something, you'll find someone that is equally as bearish as they could possibly be. So those are the main things that I'm trying to focus on. I've had a question here about the price of Goldman Sachs here. I wanted to bring this up. This was one of the questions over the weekend that somebody asked me about, because Goldman Sachs is the leader in the Dow Jones Industrial Average, because it is the most expensive stock. I think it's more 30% of the move that we've had since November has been due to Goldman Sachs. So we've rallied about several thousand points, and it looks like Yeah, around 700 of those points are due to the move that we've had in Goldman Sachs. The next one, I believe, is 3M, which has not made a new high as of yet. That doesn't mean that it can't, but we've had new highs in high-price stocks like Boeing, and also in not McDonald's, but Boeing and Apple and a few others. But those are other stocks. They're still forming major ABCD patterns, and that's why I can't really find a buying pattern in any of the Dow stocks, with except for something like General Electric or General Motors during downtrends. But it's truly amazing that that there's just virtually nothing there that I can see other than sell signals. And I know that's unusual, but that's what's happening. I went through this, of course, in 2000. 2007 was easy because the market made a new high on the new moon of October the 7th, and then just never looked back. But back in 2000, we were in that dot-com bubble, and that was the craziest. That was a once-in-a-generation move that I knew was going to end very badly. And it was one of those times where you had a certain extra feel for it because the enthusiasm was crazy. We don't have that same enthusiasm, but we do have the gaps, folks. We have gaps on the Dow Jones Industrial Average, folks. This is 30 of the major stocks, and they're gapping up. I mean, that means there's no selling from the time they closed last night to the time they open the next day. That sounds like a please let me in type of phenomenon, but maybe it goes up forever. This could be one of those times where, I've missed something. Well, I've already certainly missed this past move. I was so bullish on election night. I just can't tell you how well. I mean, we're right at a 61% retracement in the New York Stock Exchange Index, 78% on the S&P, and 78% on the Dow Jones, and this thing just took off. But I don't chase markets, and that was a bad thing to do this time, but that's the way it goes. The VIX Index is still in a downtrend. There's we've only got about 3 weeks to go for the end of these March options, so that doesn't look like that's going to work. We bought an option that was very low price, but it's even lower now, but it has very, they have never. Well, that's true. Many people have not seen a bear market. They've experienced corrections, Duffy, but they haven't seen a real bear market. Is something that lasts, a year and a half to 2 years and takes about, 40%. We haven't had that happen since 2007, 2008. Before that, it was 2000, and before that, it was, 1987. So we've been in this very strong bull market, which is normal.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're going to take a look here at the euro over the last 6 weeks. As you can see, when we were making this 3 drive to a top pattern back on February 1st, we had a perfectly symmetrical ABCD pattern. Both of the ratios from the AB leg to the CD leg were related by 1.4, 1.35. Now the difference between 1.27 and 1.414 is very, very small. So for trading purposes, this is a 4-hour chart. You can't be perfect, but that's going to be pretty close. Then we came down, and you'll see we made a 1.618 expansion of the CD leg. Then we had a very nice rally, and now what I believe we're doing is we're in the process of forming a 3 drive to a bottom pattern here in the euro, coming in around this 104.40 level. Now the key number to watch here is you'll see Friday's high was 106.20. We could get as high as 106.35 to 106.50, and this still could be okay. But if we get above 106.80, this whole pattern will have changed, and it looks like the euro has made a more substantial bottom. So watch that figure of 106.50 in the euro, because that would be 100 pips off of the overnight low. That itself would be unusual, and that would mean we would be breaking out of the 78% move of the previous down move. That would break the sequence of this possible 3 drive to a bottom pattern. That's something I think that is very important. We can see the same difference here. Someone's asked a question about what Bill Meridian is talking about. I'm going to have I'm not going to be here. Let's answer Bill. Bill has stood aside since February 6th. He's doing nothing. He didn't buy anything. He didn't sell anything. And if E.F. Hutton talks, people listen. Yeah, that's for sure. Anyway, we will keep an eye on that. But I will try to get Bill on the as a guest. I'm not going to be here on Wednesday and Thursday, folks. Those are travel days for me. Sarah and I are heading to the Orient. We're going to be in China, Hong Kong for a bit. But I'll be doing the show. I will not be able to do it Wednesday, Thursday because of the time difference in the 18-hour flight. So it makes it a little more difficult. Let's switch over here and take a look at the U.S. dollar, where we are, because we're in the same situation in the dollar, almost like we are with crude oil. You notice that we have this pennant formation with the higher bottoms. And with the euro strengthening today, we could be breaking out on the downside. And it hasn't strengthened much. We shouldn't talk about the strength in the euro yet. I mean, it's just having a normal little bounce of almost nothing. But this is a really key, what I believe is a pennant formation, because it's taken over 2 weeks to to fulfill this, and we did have that tremendous support down there at 99. Then we rallied up to the 50% level, and we've been hanging in there for the last 10 trading days, making a little bit higher lows and a little bit lower highs. So that's what makes this a pennant formation. So if it breaks out of there, that's what you'd want to be watching. But remember, it's got to continue the breakout, because things that break out above these pennants or break below them and then go right back to them are not very good, not very good to look at. That's the main thing, to see, what you're watching as you look at some of these, as we watch some of the things that we're looking at here. Okay, now let's switch over. Since we're talking about the dollar index, we really need to talk a little bit about the bond market, and I'd like to show you something that I think is very interesting in the bonds, because there's a really disconnect in the world markets, folks, between what's happening in our interest rates and what's happening with the rest of the world. Now, this is the German Bund. That's the equivalent of our 30-year bond. You can see the big move that it's had since December. We completed the big ABCD move to the upside. But look what's happened to the 30-year Treasury bond. It's much, much weaker. It's saying that the rates in the United States are still relatively high compared to what you get in Europe. So that would be another thing that would strengthen the dollar if that is going to continue like this. Now, if the bonds break out above 154, that would be totally different. But right now, this German Bund has been up for 10 days, and it's sitting right at the ABCD structure, just a tiny bit above the 61% retracement. So that itself is good. This is basically telling you, folks, when you're looking at all this, it means that we're at a real critical level in all of this stuff. That's basically the bottom line of what we're looking at. Let's take a quick look here at the notes, because the notes are showing you pretty much the same thing that the bonds are doing, only they are stronger than the bonds because they were able to take out the highs of January, whereas the bonds have not been able to do that. But you can see we have an ABCD structure in the notes up another point from where they are. This is still a bear market long term. This is just completing a long-term ABCD pattern. We topped in bonds way back in July of 2015, and I believe interest rates are going to go a lot higher. It doesn't make any difference what the Federal Reserve does. The Federal Reserve basically follows the interest rate markets anyway. They don't lead anything. I mean, everybody thinks that they do, but if you go back and look at the news and when things happen, that's not the way it is. The Federal Reserve is not a federal bank, folks. It's a private bank working for bankers, handling our money supply. And this is one of the things that John F. Kennedy, sort of campaigned on, but it got him into a little bit of trouble. But, the Federal Reserve, has a great deal of power, especially with their quantitative easing, as we've seen this with the instances what we've had with the other things that we're looking at. So we'll see see how it's going to run today. By the way, the support in the S&P today is at 23.58, I believe, is the first support that we're looking at. So far, we've been down to 23.60. Not a whole lot happening at that point. The number in the NASDAQ comes in at around 23.20. And of course, those are some of the numbers that we're keeping an eye on here for the shorter term work that we're looking at right here. Now, we did make a higher high last night in the S&P by 1 point. We got up to 23.70 and change, I believe. I believe that was the high. No, we hit 23. Only made a higher high by 0.75. We did not make a higher high in the NASDAQ, and we made a higher high in the Dow Jones by 5 points. So if this is a new moon high, like Norm Winsky thinks that it could be, and I have to agree with him, this would tell us that this could be, a significant high that we're looking at here. We also have Venus is going in retrograde motion here at the end of the week. So that's another thing that could possibly be a cycle component that would be really running. But basically what we're looking at is this new moon scenario that has been pretty accurate. It's not 100%, but it does a pretty good job of handling some of these things as we look at them through the thing. Oh, well, here's something I did want to show you. I put this in here specifically to share it with you. This is the Dow Jones chart on the weekly chart. look at this, folks. There's two gaps there. Can you believe this? Are you kidding me? These are two gaps on the Dow Jones weekly chart. You can't find those. Anybody that can go back and find where this stuff has not done this, has done this in the past, I will reward them with one of my rarest books in my library. That's how confident I feel about trying to find this. I spent a lot of time over the weekend, well over 20 hours, to try to find a situation that we have going on in the market like this, and I can't. It wasn't 29, it wasn't 87, it wasn't 2000, it wasn't 2007, it's only now.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at Tfnn.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of Tfnn.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of tfnn.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of tfnn.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting tfnn.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
Okay, folks, one other thing that I wanted to share with you, that is that if we go back and look at the long term, this is from the Federal Reserve, going back to 1929 to see what the market did, and I checked to see if there were any gaps or anything like that. Remember, we didn't have, everything was ticker tape. You know, it was Western Union stuff back in those days. Everybody used chalkboards and everything like that. So these are the things that make it a little bit more difficult. Fine, but we'll post this in here to let you see it, that we did not have any gaps in this. We did on the downside, but not on the upside. If you'll notice that red arrow there, that was the last several months of the summer of 1929 when the market ran up to September the 3rd. it ran up 25% in 6 weeks. This is when you hear the stories about the shoeshine boys and all the other things that were there, but that's neither here nor there. But this is just some of the things that we've seen in the past where I tried to see if we had gaps in the Dow. Now, I know we have, better reporting and stuff because of the data that comes through, but to see these gaps is really quite amazing. There's no question about it. Shane Smolian says that the Fed is still in there supporting, and you have to go with it. Just watch 10:30 in the morning. And if the market is not going up after 11 o'clock, that's probably a sign that the Fed is not in there that day, and they're not supporting it as much as they usually do. So keep an eye on that. Also, another key thing to watch is to see how this XAU acts, because if it keeps going down, it's going to be pretty difficult for the gold and silver to break out to the upside. But right now, they're still up on the day with a little bit of a movement to the upside, which if we can get above this 1262 level, then you've got some stiff resistance at 1266, but it would break out the ABC structure that is perfect with AB equals CD in both time and price. So watch those relatively closely is the way I would suggest you do that. I think I've already showed you the stock of Goldman Sachs. If we take a quick look at it, live every day in an attitude of gratitude, and may God bless.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of tfnn.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.